Hello, everyone. Welcome to the last live session of the week. If you've never attended these before, we've been running these 3 days a week now. So Monday, Wednesday, Friday. And it's a quick look at the major markets. We look at indices, FX, commodities, gold and oil, just to see what's been going on in the week so far and some of the big levels to watch out for, where the opportunities might be. That sort of thing. Clearly, it's something of a quiet end to the week. I think I didn't check, but I think from memory, is it a half day in the US today? I think because of Thanksgiving. I can't remember, but clearly the Thanksgiving holiday in the US, so something of a quiet day. Everyone's busy doing their Black Friday shopping and all of that sort of stuff. So we'll see where markets are ending the week, and then we'll do it all on Monday. I think that risk warning's been up for long enough, hasn't it? So let's get into it. Let's have a look. Let's start with oil, down again today. Price of oil, here we go. Let's just flip this open. Here we go. This is that trend we've been watching for a while now. We saw, whenever we were doing this last time, Wednesday, we saw a bit of a recovery on Wednesday after that massive sell-off on Tuesday that took it from 57.50 below 53. Bit of a bounce so far, looking like a dead cat bounce. And now oil is trading at its lowest level since October 2017. So almost a 13-month low for the price of oil. Shows no signs of stopping. We talked about this in the week, about how oversold the indicators are, but it's dangerous just to rely on oversold indicators in a market that's trending as strong as this. So really oversold on the RSI. It's been oversold since oil was $65 a barrel, and it's now 20% lower than that. So it's a market that is still incredibly weak. Next big support level, the really big support, I suppose, the October lows, $49.50 a barrel, pretty much. So let's say $50 a barrel to round it up. But it's a market that is still very weak. If you look on the hourlies, there we go. We have got, it's a perfect trend going on. Actually, let's make this a 4-hour chart and pick up on that trend and see the levels that need to get broken. Let's just plonk our trend line on that. But not too much to say, really, apart from the trend continues. Oh, where's my drawing tools gone? The downtrend continues for the price of oil. I don't know why it doesn't like drawing that. Let's draw a point to point. Hang on. Let's just flip this up. There we go. Let's bring that up again. Oh, the trend line isn't sticking today, but we can see how clear that downtrend is. We need to rally through, I'd say, at least $56 a barrel to shake that downtrend off. It's a market that's still incredibly weak. Any rallies look like selling opportunities rather than a suggestion the market's about to turn around. So let's see what next week brings. But a very weak finish to the week, plunging to a 13-month low, pretty much almost today. Let's take a look at stock markets. Stock markets are interesting. Stock markets continue to be under pressure, but we are near some big levels. Let's start off with the S&P 500. So let me just bring that up. Let's flip it over to a daily chart. I've just recorded a video this morning that should go on our YouTube channel this afternoon, asking the question, will we see fresh all-time lows? Fresh lows for 2018 before the end of the year. I think that's maybe being a bit too bearish, because the lows for the S&P from February were in at about 25.30. We'd need to drop more than 100 points on the S&P from here. Clearly, it's doable. We've still got 6 weeks left to the end of the year, but we do have, support coming in. First of all, 2,600 on the S&P, the lows from October. Support at 25.90 from May, and support from back here, 25.50, down to the lows for the year, around about 25.30. So it's a market that continues to be weak, but maybe we're getting now down to a level, down to those October lows, where we have seen buyers come in the past. We saw the market rally from 2,600 up above 2,800 the first week of November. So I think it's going to be an interesting few days for stock markets. If you flip this over to an hourly chart, we'll see that a bit clearer. Here we go. So when we were down here last time, end of October, lots of volatility day to day. Eventually the market did form a base and rally off here. So 2,600 on the S&P, the big level to watch. If we change this over to a daily chart, I don't think the indicators are telling us that much. They worked pretty well down here when we had a low, then a lower low. The RSI was making higher lows, so we had this bullish divergence set up where the market's pushing to lows, but the RSI is making higher lows. But at the moment, nothing really. Almost went oversold. So since we did this on Wednesday, since we were back here, we're pretty much where it was on Wednesday. But I think 2,600 for the S&P. If we're short-term trading it, if we're watching this afternoon, clearly over the last few days, let's just zoom this up. This is an hourly chart. So this was, what's the date today? The 23rd. This was Tuesday. Tuesday's lows, 26.30. Rallies, comes back down to it yesterday, 4 o'clock yesterday, trades down to about 26.29. We're currently at 26.38. So again, I think this afternoon, 26.30 is the short-term level to watch. So if we're going to see buyers come back in the short term, let's keep an eye on that 26.30 level. So I think we are in for some interesting times in stock markets. The Dow, I think the level is even more obvious on the Dow. Let's flip this to a daily. 24,000 dead is pretty much the level to watch. Let's just get rid of that. That's not important anymore. So we had the lows from October, 24,100, and then going a little bit further back, well, a lot further back actually. June lows, 24,000. So 24,000 to 24,100 had been a big level of support for the Dow. Let's see what happens the next few days. So we've still got, a couple of hours till US markets open. We're trading at 24,390. If I flip this over to an hourly chart, there we go. So the Dow is bobbling around the lows from yesterday. Let's see what happens today. But on the dailies, 24,000 to 24,100 is a big level. To wrap things up on stock indices, take a look at the DAX. The DAX is interesting right now, actually. I was looking at this just before we started off today. But I think we talked about this on Wednesday. Earlier this week, it did slip to its lowest level. So this is the German index, slipped to its lowest level since December 2016. So we have touched a 23-month low, the German stock market, this week. That 11,000 level is doing so far a decent enough job of stopping any weakness, but 11,000 is the big one for the DAX. We're currently trading 11,160, just below that. Let's see what happens. And I thought it was interesting just before I came on, just on a really short-term chart. I think it was the 5-minute chart I was looking at. So yesterday it sold off to, so this was yesterday morning, 9:15, sold off to 11,110. We saw a rally up to 11,190-ish. So we saw an 80-point rally off that. Sold off earlier this morning, touched 11,120. Saw it rally to 11,200. So an 80-point rally. And we've just come back to it in the last 10 minutes. For me, if it sells off from here and comes back this afternoon, it's a buying opportunity. It's got maybe a bit ahead itself now. I wouldn't want to be a buy now with a stop loss under these levels. But over the last 2 days, 11,100, 11,120 on the DAX has been something of a level. And it has held over the last half an hour or so again. So let's see what happens with these markets, these stock markets. We'll have a look at it on Monday as well. But we are getting near to what had been major support. So I think it's bounce or bust time for these US markets. And clearly that's going to dictate for the rest of the world what's going on. Much volatility in the pound yesterday. It's crazy. That isn't a spike yesterday, that move. So again, very Brexit driven. So from 10 o'clock yesterday morning, the pound was trading at, pound against the dollar, 127.90. 25 minutes later, it was 129.26. So it moved 130 points in 25 minutes. And then in this 10-minute period yesterday, 25 past 11, it went from 128.84 down to 127.85, so 100.4, and all the way back again in 10 minutes. Massive volatility yesterday. Again, clearly Brexit driven. All the conversations going on at the moment, maybe the end game for the discussions. But when we were looking at this earlier this week, I was saying that I thought that, clearly 127 to 127.50 had been something of a floor. If we go back to the dailies, I still think it's more up than down for pound US dollar. We hit the lows of 126.70 in the summer, 127-ish in October, 127.20 in November. So the low 127s are still propping up the pound. You can see we've not made much progress this week. Plenty of volatility as we saw yesterday. but not much in the way of progress. Let's see if we get any news coming over the weekend to give us a bit more direction, but a pretty volatile couple of days. Let's take a look at euro dollar, then we'll look at gold, and then I think we are, unless there are any questions on the YouTube chat, we're done for the day. So the euro, we were looking at this earlier this week. That trend line did a good job until about, 3 hours ago. So if we go back to wherever we were on Wednesday, so Wednesday, we were looking at this about here somewhere. I can't remember where. 12 o'clock Wednesday here-ish. Looking for that trend to hold. The market pushed a bit higher from 113.87 to a high of 114.30 yesterday. So we're another 50, 60 points from the euro from where we're looking at Wednesday. But it's dropped down. So we started dropping this morning. I think we've had some really weak, I've been out in voice this morning. We've had some really weak economic data from Germany this morning, weighing on the euro. And it's knocked the euro back. It's knocked the euro out of that trend line. I suppose if you take the view that the first break of a trend line, or the first break of support, is maybe an overreaction, then perhaps the aggressive trade here is to do a trade based off maybe these previous lows. We'll do that trade now, actually, because I think people always like to do a trade on these webinars. So let's do the trade in a minute. So we had these lows from November the 16th. Where is it? 113.22. The market slipped to 113.38. So let's say we're going to take the view, right, the euro sell-off is overdone. We want to be a buyer. Maybe we'll see the market claw its way back up above 114.50. We're going to put a stop below 113.20 is what I said, isn't it? So let's do that trade. Let's bring it up. So how much? So my stop is going to go below 113.20. So close at a loss. At a price level, let's say 113.05. Give it a bit of room. We're going to buy wherever it is now, and then I just need to scale up. You can see on there, so you can see on my dealing ticket, my loss, if I buy now at 113.60 with a stop at 113.05, I'm only trading 1,000. It's a small position. My loss is £4.24. Let's bump this up to how much do I want to lose on this if I'm wrong? Let's say we only want to lose 30 quid. So we'll do 7 times the size. We'll do 7,000 on euro. There we go. That's it, isn't it? Buy. Done. Okay. So let's see how that runs for the rest of the day. So basically, just to recap, we've bought it here, wherever it was. We'll have a look in a minute. Stop loss underneath these old lows. It has fallen out of the trend line, but taking the view that maybe it's been overdone. Okay, so there's the position at the moment. 113.58 is where we bought. The market's pretty much 113.58. Bought 7,000. There's our running P&L. So we'll come back if that's still running on Monday. Let's see how it's running on Monday. So maybe that weakness for the euro, that knee-jerk reaction, is maybe a little bit overdone. And finally, gold. So let's have a look at gold, and then we'll wrap things up for the week. So gold, not much has changed on gold. I still think, from what I was saying, we don't want to buy gold just yet. What I was saying the other day, it's quiet, but I think the moves we've seen since those August lows still suggest that maybe we're seeing a gradual recovery in the price of gold. If we look at it like that, there's our trend on gold. We're pretty flat to where it is, but the trend line is held. I think I mentioned I did buy it about a week ago, assuming that 1180 to 1200 is going to hold. You know, I think if we are going to see a recovery, then maybe longer term we see it chug its way back up eventually at some point next year to the highs from this year at 1350, assuming that trend holds. Let's see. It's pretty quiet day to day, but for me that recovery is still holding. Only if we break below here does it start to look as if that recovery is in trouble. So let's see what happens. And that's it. So I think in the short term, stock markets are interesting because we're getting back on the S&P and on the Dow to the lows from October and the lows from earlier in the year. Oil is still incredibly weak, just getting battered almost every day. So we're down to a 13-month low nearly on the price of oil. And the little trade we did on euro dollar, just to see if that knee-jerk reaction this morning is a knee-jerk reaction on euro dollar, and do we see it claw back some of those losses? Let's see. We'll see where we are on Monday with that. But it's a quick one today because it's been a bit of a quiet one because US markets are shut. So we'll wrap things up there. Any questions afterwards? Leave some comments on the YouTube thing and YouTube recording. There's a few questions coming through now. Why do you think this how do you think like this about gold with what the dollar index looks like? That's a good question, actually, because the dollar has been incredibly strong since May. And clearly, if we've got a strong dollar, that is going to normally weigh on the price of gold. I think that maybe in the short term, we could see a bit of weakness for the dollar because it has had such a good run since April, May. I think personally, this is all my personal opinion, obviously, the fall in gold has been perhaps overdone. It dropped $200 off those highs to the summer lows. So I think maybe the dollar's been stretched too far up. Maybe the gold's been stretched too far down. Let's see how right I am over the weeks ahead. We'll see what happens. What do you recommend to trade today? We don't do recommendations. I think there's a lot of opportunity out there. So, but we could have a quieter afternoon because it's the Thanksgiving thing and Black Friday and all of that. So maybe we'll see a quieter afternoon this afternoon. Let's see what the rest of the day brings. Okay, but thanks for coming along. Any other questions, leave them below this YouTube video or drop me an email, david.jones@capital.com. To find out more about the company, open an account, open a demo account, look at the charts I was using, go to www.capital.com. And we'll be back on Monday. We'll see what the week has got in store for us, Monday, 12:30. But up until then, have a great weekend, and thanks for coming along today.